Boston with the new Boston Federal Reserve President Susan Collins at their conference, which is focusing on labor and labor outcomes. Thanks for joining us. I believe this is your first television interview as president.
It is. I'm delighted to be here. Particularly, thank you for joining us for our 66th conference on the pandemic, during the labor markets during and after the pandemic.
I've been to 66, but I've been to a bunch of them. I want to start off in a place that's not usual these days, which is in your speech earlier, you talked about a pathway to avoid a recession. So I want to start on the good news because there's plenty of other stuff to talk about on the other side. Is this your base case avoiding a recession?
Let me be really clear about my view here, and I do think that it's important. I'm really glad that you wanted to start here. I do see a pathway to bringing inflation down, which of course is the imperative right now. Inflation is just too high, and so we are moving forward in order to accomplish that task. I do see a pathway in which we're able to do that without needing to increase unemployment more than some modest amount. And I'm not going to put numbers on that. At the same time, I'm very realistic. There are a lot of risks. There are no certainties here. And I do think, though, that there are concerns that we could have a self-fulfilling dynamic that would make a significant downturn more likely. And so it's important to talk about reasons why that is not the only pathway.
It's especially relevant. Goldman Sachs out with a report last night saying that they believe the U.S. will narrowly avoid a recession. I guess I need to come back at you again. Is it a footpath? A fire road? What kind of pathway is it? Is there one chance in 100 to make it, or is it something that is a reasonable expectation?
I am reasonably optimistic, and here are a couple of reasons. This is a very unusual dynamic that got us to where we are right now. As you know, it's still true that vacancies are really high relative to unemployment. And so we're looking at the data carefully. We're doing all kinds of different analysis. And so bringing those vacancies down, there are a number of firms that are still trying to hire and that tell us, and I'm out in the district talking to employers of different sizes, that even if demand slows, which of course is what we are doing in order to reduce inflationary pressures, that they expect to continue needing to hire. And balance sheets are strong. And I still see inflation expectations as reasonably well anchored. So there are a lot of reasons to have that optimism, and it's based on that analysis and that data that gives me that view.
So now let's talk about the other side. Are there risks that you don't do enough and inflation gets out of control?
There are risks, and I think it's important to keep both of them in mind. I mean, what we're seeing right now in terms of the costs of the high inflation are significant, and they take a toll on, across the board. They particularly impact those of lower incomes who are finding much more difficulty meeting ends meet. They also are impacting firms' investment plans. And when you get to a dynamic where people are spending more time avoiding high inflation than doing productive activity, it's just not good for the economy. So it is really important that we bring inflation down, and we focus on that at the moment.
Where do the risks lie, President Collins? Are you concerned that the risk is from the Fed doing too little to bring down inflation or doing too much?
They're both risks. So if we aren't successful bringing inflation down quickly, there is a risk that it becomes entrenched in expectations. And what we've seen in history and around the world in so many different experiences is then the costs of bringing it down are really high. And so avoiding that is important, which is part of where my resolve comes from. There is a risk, especially as we raise interest rates more. We're now in a territory where there is tightening from the level of interest rates. And the higher we raise interest rates, that does increase the risk that we might go too far. And that's part of the reason why I believe we're now in a phase where kind of deliberate increments, all of the possible increments should be on the table as we decide what is sufficiently tight and what the pathway is to get there.
So we talk about increments, that suggests you still think the Fed has further to go.
Absolutely.
And you don't want to, I've looked at your prior interviews, and you haven't wanted to give a number for how high. Has that changed? Do you have a range that you would share with us about how high you think rates may have to go?
I'm not going to give a number. What I've said in the past is that the SEP, the Summary of Economic Projections from September, that at the time I thought was a reasonable range. I would say that some of the data that we've seen since then has kind of increased the top of where I think we might need to go. And as you know, in December, we will be giving additional information. A new SEP will come out at that point, and there'll be new data between now and then. And so that'll influence my own thinking